What's up? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily live stream. My name is Kelly Kellam, and welcome to the show. Welcome to the BitLab Academy daily live stream. As you can see, I got the studio all set up now where no matter where I'm at, I am in the BitLab studio. So let's do this. We got a lot going on today. Fed Chair Powell was just talking. A lot of things going on with a lot of things that people are saying and doing. And is this manipulation or is this actually something going on within the market? So am I back in town, back in the studio? Well, I can tell you right now that no, I am not, because as you can see right there, I've got a lovely little green screen behind me, so I can always make sure that I'm here with the family and we can keep it professional so you know exactly where I'm at. I'm right here in your earphones, in your headset, on your screen, coming to you from the BitLab Academy daily stream. You never know where I'm at because the data is all the same. I'm here to break down what's going on in the markets. I'm trying to bridge that gap from beginner to pro, no matter where you're at within the scene. Let me go ahead and throw in a headset here just so I don't get any of the dings coming on the microphone here. Let me know if there's any issue with what's going on. Let me know if there's any issue with what's going on with audio, video, anything like that. So shout out, hit that like button, hit that subscribe button, ding the bell. Let me know that you're here for the data, baby. So yeah, I've been really just living in the charts lately, trying to make sense of what's going on. And just so anybody knows, you're never going to have 100% full picture, but what you can have is never-ending, persistent adaptability to new stimulus in the market. We don't want to stimulate too much live on stream. This is a family show, so a little joke there. So shout out to everybody in chat. Welcome, all my wonderful mods and all the people that have been here. Shout out to Taylor Brown being the first one in the stream today. Alex Green, how you doing? Papa to Kiss, Alexandra G, Crypto JMP, Mellow Fellow, Karen Swigart, Harris, Matt C, my boy. We got so many people in here, so shout out to everybody. Justin Eubanks, if I do miss your name, it's okay. Elliot Locke. I'm just trying to do intros as quick as possible so that we can jump right into the stream and sort of get this going into the data that you came here to pay attention to and to learn from. So let's go ahead and do that. We're going to be going over a lot of different projects today. We're talking about navigating with what's going on right now. We've talked about it a lot on stream so far about really trying to dominate, the patience in ourselves so that we can let trade setups develop so that we can make use of the chart price action regardless of what direction it's going. So again, my name's Kelly Kellam. Thank you for being a part of our community here. If you're not yet, hit that subscribe button. Join our community. We're all about positive encouragement, empowerment, data, and trying to figure out how we can do this together. You know, I've spent years in the markets. I spend a lot of time with other very sort of experienced analysts and traders. We all talk about what we can do to provide for a stronger crypto ecosystem. And it starts with streams like this. There's many other streams out there that you can watch as well, and I recommend any of the ones that you watch. It's good to have a varied sort of viewpoint on the market as to what's going on from different people's viewpoints so that you can form your own. So without any further ado, again, hit that like button, hit that subscribe button, ding that bell, and if you haven't yet, make sure that you check out bitlabacademy.com. Oh, look, there's a backdrop right there. I did not set that up, but it's all good. So let's go ahead and jump into, I got a scratch on my back here. Let's go ahead and jump into what's going on the charts in the screen. If you have not yet, make sure that you come over and you follow BitLab Academy, which is youtube.com/@BitLab Academy. And you can see this right here. I did a sort of snippet of a section of a show from last week that I posted yesterday, and it's this one right here, the best indicator for traders. I really sort of break down everything, how to utilize multiple points of confluence on the BitLab trading stack so that you can really have leading indicators where one or two of the signals are flashing, and that never means take a buy or a sell. that means, okay, when you get a leading indicator, when you get a leading signal, and it doesn't even matter if it's just a BitLab trading stack, it could be traditional indicators like RSI, stochastics, momentum, money flow. It could be market cipher. It could be Luxalgo. It doesn't matter what indicator pack you use or grouping of indicators. The point is to make highly probable trades and identify them and take those trades is to look for some leading sort of indicator that's signaling something might be brewing, and then finding your, that's your one, and then having your 2, 3, 4 points of confluence that give you that highly probable trade. So if you haven't yet, if you're watching over at the Hit Network 24/7 stream, I'd recommend everybody check it out at some point for sure. But then also, and that's basically right here. If you come right here, see how it's 24/7 stream, but make sure you also come over here and you check us out over here at BitLab Academy. We do daily live streams every morning, 10:30 a.m. Now we're going to jump right into it. I think that was quite quick little 5-minute shout out to the audience. Hope everybody's doing well. Let's go ahead and jump into everything that we want to talk about today. First thing is this. I just thought this was funny as the Fed talks, as the government officials are up in there, trying to do what they need to do, to positively impact what's happening with our people, with our economy, with the monetary policy. Look at what the dollar index did. I don't mean any offense. This is more of a family show, but this is how I feel about it right there. This is a FUD middle finger from the Fed monetary policy talks, because it's, as they're doing that, what is this signifying? This is signifying that money is coming out of assets. They're protecting themselves, and the strength of the dollar is going up. Similarly, we talk a lot about, and I put this out in the newsletter yesterday, which if you're not a part of BitLab Academy newsletter, which is a free newsletter, just come over to bitlabacademy.com, and on the pop-up, put in your email here. You get access to that email, that newsletter for free, and you get entered to win a free month access to the courses and the indicators. And I don't know if I announced this yesterday or not. I can't remember, but third week of March is when the updates will be starting to basically rolling out for the new BitLab Academy with all the new, well, not all, but a bunch of the new courses. We're going to be filming new courses and content and lessons for the next few years, but there's, I think close to 100 new lessons that are coming out very soon. So get in now, because if you get in now before those updates roll out, you will be locked in at this current lower pricing, because the pricing will be going up, and everybody that joins before that will have this lower price for the lifetime of their account. But point being, the newsletter I sent out yesterday, I also highlighted this, which I talked about yesterday on stream. Where is it at? This sort of relationship between USDT dominance. When this goes up, crypto markets go down. When this comes down, crypto markets go up. And we've seen this time and time again. I've shown you that the relationship between the orange line being Bitcoin price going up is in perfect correlation with USDT dominance going down, and vice versa. So it's a good thing to start your day every day. If you're not going to look at traditional assets because you're 100% all in crypto, I don't fully recommend that in terms of getting your grander scope of what's going on in the market, but at least put this chart, the USDT.D, in your list over here. You can just add it in, boom, put in USDT.D, press the plus symbol, and then you'll have it in your list that you can always refer to, just so you can get a good understanding of what's happening with the market in terms of risk on, risk off behavior. We could see that we're getting a little bit of an attempted push up, but at least on the positive side, this is starting to roll over. But we're going to run through a bunch of stuff today, and then we're going to go through a lot of charts and see what sort of levels, how we can plan our strategy. And we went through a whole trader's checklist yesterday, which I also included in the newsletter. So check that out. And in that newsletter, you still have an opportunity in the newsletter towards the top of the newsletter and the bottom. I believe there's a yellowish orange button that basically allows you to vote on some of the content in terms of different projects that we may be looking at on stream throughout the daily streams here on the YouTube daily stream, as well as content that you'd like me to either address more sort of focused lessons here on the daily stream, as well as in BitLab Academy, as well as in the newsletter. So enough of that. Let's get this going. So we've got the dollar index pushing up. We'll look at this more specifically on the chart here in a moment. But I just want to point out a few things. First things first, everything's going on in the market, all this stuff, but we still have to contend and understand what's going on with the Bitcoin halving cycle. As we've seen, that 4-year cycle can be very important as it pertains to what's going on with where we're at in the Bitcoin bull or bear market. And we can see with this chart right here that we are about 71% of the way to the next halving. Now, for anybody that doesn't know, we always have to remember, and I want everybody that's further along, we have to be patient as everybody else grows. So every once in a while, I will pause and sort of throw sort of line back to the beginners. The halving has to do with the miners. The miners are the ones that secure the network and process the transactions. They compete to mine the blocks. Okay, they compete to solve that incredibly difficult cryptographic sort of problem set, and whoever wins, whoever does that the fastest, basically secures that block, and there's a block about every 10 minutes, and they get a reward for it on every 210,000 blocks, which is about every 4 years, hence the 4-year cycle. That is when that mining reward halves. It was 50 Bitcoin per block years ago, and now it's about 6.125. And this next halving, it'll be 3 point whatever half of 6.125, 3.0625 or something like that. But so this really helps it allows everybody within the network to understand what the supply dynamics are of Bitcoin. And as it stands right now, we can see where the Bitcoin cycle is in terms of bull market, bear market, and how that relates to where we're at within the halving. Each one of these lines here is the halving, and we can see about 71% of the way through, got a bullish impulse, pullback, and then basically strong bull market all the way up into a parabola to a blow off top. Similarly here, we get a push up, small pullback, a little bit of a world catastrophe shutdown right here, and then strong bull market until we get the top. Now we're about 71% of the way. The halving will be sometime, and it's debatable because it's not on a specific 4-year cycle. It's more specifically on about 210,000 blocks, which, because they're regulated around every 10 minutes, it'll be sometime in April or May of 2024. And so this is what we just want to pay attention to as it relates to what's going on within the market. So now let's continue on. We're going to look at some traditional things first, and then we're going to be jumping right into charts. So I just want to point this out because we have to understand some larger context things outside of the Bitcoin and crypto and altcoin markets to understand where the sort of state of the economy is. And when you have a large company like Alphabet, and in this case Google, Alphabet is a parent company of Google. They told employees that it's going to reduce the number of promotions to senior and leadership roles this year, citing this is the key word, a slowdown in growth. So if there's a slowdown in growth that's being recognized by these large institutions, and there's another, I don't want to pull it up right now because I don't want to take time to find it. There's also a huge number of layoffs that have been happening, especially in the tech sector. Now, this doesn't necessarily spell disaster, but it does indicate that there is some tightening of financial concerns within those industries. Also, when you think about it, these larger institutions and corporations, they don't do stuff because of what's happening today. They are forward looking. They look at projections as to what's going to happen in the markets, in their sectors, in the economy over the next 3 months to 2-3 years, and they plan accordingly so that they can be ahead of the curve. So is this signaling that there could be still a little bit more of a traditional market slowdown? It very well could be, but we need to look at more data. So this is just something to keep on your horizons and just general awareness. Now, here's another traditional sort of aspect that we need to look at. Game of Trades, wonderful account I've brought up a number of different times with you all. Data-driven investment research, follow to learn about finance and the global kind of blah, blah, blah. Okay, so essentially what we're looking at here is decline in conference boards leading index calls for a recession. Recession levels have been hit. Essentially, each time this level hits, there has been a recession to follow. Now, the problem with this is most of the people in the crypto sector are far too immediate because things equals that we've had a recession. That's not necessarily how it works. It has a lot more to do, has a lot to do with the pullback in the market, but as much or more to do with what's happening with spending, what's happening with the inflation, what's happening with employment data. Is there a lot of unemployment? Is there growing employment? And this is why right now there's been such a contentious time to figure out what the heck is going on in the markets, because we've had a pullback in the markets over all of 2022. But then, we've had this huge citing of inflation and all these sorts of things. However, we started getting positive CPI news in terms of inflation coming down. December, January, and then all of a sudden they go and change the whole, book of definitions on us, not just defining what a recession is, but actually how they're measuring this inflation data, which then they went back and retroactively changed what those inflation numbers were. So although, the market looked like it was trying to rebound on both traditional assets and with the crypto, then all this stuff gets adjusted. It's as if it's literally as if they are manipulating what's going on in the markets. But let's be honest, that's clearly the case, because they don't want to have this positive incentive to think that they need to be softening their stance, because their goal really is to bring inflation down to 2%. Will they get there? I don't know. Or is it going to be a time-based thing that we get inflation sort of entrenched, meaning we get used to these prices, and then moving forward after next year and the year after that, then it's just 2% increases from where we're at. There's no telling currently right now. So all we can do is plan we could plan our sort of strategy of attack for either direction the market's going. And as I mentioned in the title of this video, as well as in the thumbnail of this video, is another drop in order before we get liftoff. We have to always remember, because we get a pullback, that doesn't mean things are going to zero. Because we get a pullback, that very well could be a springboard into, a positive upside from there. So we need to take a look at a couple more things, and then we're going to hop into all the charts. Now, this is the Fed chair speech that just happened. It was prepared remarks that he had before he went in, testifying in front of the Senate, I believe, or Congress. I can't remember which one. But, this was a key factor right here. Fed Reserve Chairman Chair Powell on Tuesday cautioned that interest rates are likely to head higher than central bank policymakers had expected. So this is why when we are looking at the charts, and this is why on days like today, I don't like to just, take shots and trade the volatility, because there's no idea what direction is going to happen. And as we can see right here, if we zoom in, look at this big green wick. Okay, we're going to come actually down to the 30-minute chart. Let's go down to the 15-minute. Okay, look at this. This was when the Fed Chair Powell, he started at 10 o'clock, which is right here. And then look at this massive drop. And where did it go? Basically almost down to the support level, and then rocketing back higher. So how do we contend with this? Well, we're going to get into that in a second. So again, start throwing in all the coins you're interested in. I'm going to do, I've done a lot of sort of lesson-based TA over the last couple weeks, and I'm going to try and make it a point to do, I'm still going to do lessons along with the TA that we're doing on stream, but I'm going to make more of an attempt to do some of that lesson-based focused on an asset, and then do basically like 2 or 3 minute technicals where we really go through a lot of different charts, so we can really get you guys really break down some of the charts of the things that you're looking at, some of the charts of the assets that you're wondering about, or you're holding off on getting. And so you can understand how to break down the charts on all those. Now it is 10:50. So my time, I'm here in New York. So within the next 5 minutes, we're going to be getting into charts. So if you have not yet, hit that like button, hit that subscribe button, ding that bell. There's far too many people that watch this show, which we put out for free, and you can't give us a quarter second of your time to hit that like button, hit that subscribe button, join our community. This is all about growing, and we're learning together, and we're sharing. I'm sharing my experiences in how I've lost tens of thousands, if not hundreds of thousands of dollars, and then how I've been able to make that money back, and basically helping you all learn from my mistakes and learn from each other's mistakes so that we can dominate this market. This is bridging that gap from beginner to pro. So let's continue on here. Let's continue on here with what we're talking about. Now, Fed Chair Powell talked about the interest rates likely to go higher. Well, I can tell you right now, this is going to be very, very contentious on, let's see, Forex calendar, boom. So if we come here, and actually I'm going to go to Market Watch. Let's go to Market Watch. Market Watch. Okay, so if you come to Market Watch, come over here to, economy, and then come down to U.S. economic calendar. And we can scroll down, and what we want to look for here is, I believe it's on, we got a lot of data coming out throughout this whole month. Let's see, we're looking, so core CPI, this right here, March 14th, this is next Tuesday, a week from today. This right here is going to be very, very, very important as to what the true determination is going to be from the FOMC, the Federal Open Market Committee, which is essentially how they're a board of basically Fed chairs from different states, and then of course Chair Powell himself. They're going to contend with all this data that they're getting about what's really happening with inflation, our numbers coming down, our asset price, our pressures on the economy changing because of employment or unemployment. Is inflation going up? This sort of data. And then follow the next day, PPI, producer price index, retail sales. We're getting all of this information that's coming out. And then I believe on the 21st, if I'm not mistaken, let's see. Let's go back to Fed Forex. Here we are. So I believe, can I not go forward? When is the next FOMC March 2023? When is it? Yeah, March 21st and 22nd. So this is when we're getting that data, the updated data as to what they're going to do with interest rates. And then, so if we're trying to speculate on that, and the markets are forward looking, and this is going to have an impact on basically loosening conditions for markets to run or tightening conditions for markets to continue to pull back and get crushed. Well, we can look here over to the cmegroup.com, and you can basically you can type in, if you want to Google it, CME FedWatch tool, which you don't know if you can't see my address bar at the top. CME FedWatch tool. We can see here. This is sort of the CME groups, Chicago Mercantile Exchange, basically professional traders, institutional type traders, really looking at what's going on with their different economic models, the data that they're getting, and how they can predict what they're betting on based on their options trades, whether or not we're going to get a 25 basis point hike, which is highly expected, or if it's going to increase to a 50 basis point hike. This would essentially right here, this would be the 25 basis point hike. We're roughly about 70%. And this here would be, this has increased over the last few days to 30%, thinking that we're going to get a 50 basis point hike. So if this starts to increase dramatically, and especially next week when we're looking at the CPI data, and the PPE data, and the PCI data, all the sort of data points that give us good indication about where we're at economically, where we're at with the inflation, where we're at with spending, where we're at with all the things, all the ingredients, all the tools, the data tools that these economists utilize to figure out how they can get our economy under control, which let's just all laugh right there. I mean, we've got $33 trillion or something like that in debt. Is really anything in control? It's all a facade, but all we can do is play the data that we're seeing and how they're navigating it and use it to our advantage to trade effectively. What's up, Kurt Eichler? How you doing? Hope everything's sounding good, looking good, feeling good. If you haven't yet, hit that subscribe button, ding that bell, hit that like button. But we're going to jump into some things here. Now, this is something that I want everybody to pay attention to. This is a potentiality. Of course, this is the Bitcoin price, But these, this is the potentiality here that we really need to take to heart as something that very well could happen. I'm very bullish based on what's happened on the 4-year cycle, but I have a conservative bear in me that's saying you need to calm down. You need to slow your roll, Kelly. You need to be hopeful for this bullish push, but you have to be prepared that markets get crushed. We go into a deeper recession. We get tighter monetary policy. We have more quantitative tightening, in which case that we very well could, basically break this sort of bullish impulse that we've had and start breaking down. And I don't necessarily think we're going to be breaking all the way down to $9,400, but you have to at least entertain the possibility that could be the case. If you have a very bullish narrative, ignore it for an hour one day and just plot the entire bearish potentiality of the assets that you're looking at. And if you're trading altcoins, then you need to start with looking at mapping out Bitcoin to give it, because Bitcoin is a great indication as to what's going on with potentiality. Is very American word. Yes, it is. Basically, you can utilize Bitcoin as a good barometer as to where we're at with our sort of feeling and sensibilities about where we're at with risk within the crypto ecosystem. If Bitcoin is tanking, yes, there might be a couple altcoins that pump, but in general, if Bitcoin is struggling and it's the least risky asset within all crypto, then the risky assets are going to tank, 3, 4, 5x more than Bitcoin does in a lot of cases. So I just want to point this out. As bullish as I am still, because we haven't broken some key levels, I do want to point out that we do have this American word, potentiality. We do have this possibility to go to the downside. So I just wanted to point this out. Now, moving on to this next chart, we also need to pay attention to something like this, which, max opportunity. We're trying to determine, and I've talked about this so many times, and we're going to come back over here. We're going to go to, let's go down. We're going to, we want to identify, we want to identify, are we somewhere here? Are we somewhere here? Or are we somewhere where, is this where we think this could be the smart money accumulation? Or are we somewhere more something like this that's going to continue down? This is further exemplified, and I talk about this every stream because it is important. This is important. Are we here fighting our way out to establish this? Or are we somewhere either here or even still down here getting a lot of chop? We need to prepare both directions, conservative and aggressive, and have our action plan in place so that we can dominate this market. So where are we at? Let's go over, boom, boom. Okay, so this is what we were trying to identify. Are we near that max opportunity? Well, we do have this. This is from 888 Velvet. Sometimes his name changes regularly, but he's at 888 Velvet. And if we just look at this fractal, this should give a little bit of hope while we can still maintain being a bit conservative. Just look at how this sort of trend line marked the top. This sort of trend line marked the top. Also, we have this sort of descending broadening wedge, slight breakout here. Look at what happened here, breakout, a little bit of retest, and then continue to the upside. So there are possibilities in both directions. And so we need to jump into the charts and talk about what they are. We've already talked about this chart. So now let's go ahead and zoom out and look at what's going on here. Let's look at what is happening in these charts. So let's go to the 4-hour. Okay. So, look at this, just ascending sort of wedge, fake out to the upside, breakdown, fake out to the downside. This is what choppiness is. And this is why you don't need to be, I really recommend, unless you're a professional, this is why you do not trade in leverage in these moments right now in the market when we are still undetermined in this choppy level. Boom, 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 boom. Because people get eaten alive in these zones. And so we can see this just by this sort of risk metric that I like to call the dollar index, because we're seeing risk risk come out of markets, risk come back into markets, risk come out of markets, risk come into markets, risk and come out of the markets. There's not a clear defined sort of level of what's happening with the economy right now because there's uncertainty in monetary policy. There's uncertainty that inflation is going to come down. There's still some speculation. There's still some speculation as to whether or not some of the issues with inflation, some of the issues with supply chain, some of the issues, all these things that are stemming from the global economic shutdown in March of 2020, are some of those things going to just naturally resolve themselves as China opened? And now, I remember seeing a metric the other day. The cost of shipping out of China has now basically dropped off a cliff, which is a good thing because it was, the price of shipping out of China was through the moon because there was no workers, because there was this supply chain bottleneck, because industries had shut down, because the country, a lot of the country, parts of the country were closed. That all these things lead to inflation, not only basically globally, because there's these other impacts that don't have to do with just prices going up and money printing, but all these things are compounded by leaning on each other. So we need to understand that. So jumping back here into the charts. By the way, I didn't ask, how's everybody doing? How are you feeling? Are you bullish? Are you bullish for March? We might have choppiness now. Are you bullish for March? Or March, or are you bearish? Let me know. Throw it in the chat. Let me know how are you feeling about the market. Do you feel like this sort of choppiness is going to resolve itself through the FOMC meeting? Getting that 25 basis point hike and then maybe some upside after that, or are you playing very conservatively? Are you waiting for a lower number? If you are waiting for a lower number, let me know what that lower number is that you're waiting for, so I can front run you. No, I'm just totally joking. Let me know what that lower number is. We're gonna pull up these numbers on the chart, so we can just take a brief look. Man, look at this. Look at this on NASDAQ. We had the perfect, beautiful bounce here. Now, look at this extended line that didn't seem like it was mattered. It was from here, touched this point, and look at where we rejected. This is why I like to do some extended lines, as we can see here. It gives us some opportunity to have potential opportunity for where price action may interact. If we see this bounce, rejection, what's going to happen here is going to give us a good determination as to where the market as a whole, the general consensus of the market. That's what each one of these candlesticks are on a chart. It's a consensus. This is a democratic process. Every time you look at a price action chart, when you see a green bar, the voting on that bar was more bullish. When you see a red bar, the voting on that bar was more bearish. That's how this works. And we can see this mapped out over time. We're seeing the psychology of the market mapped out when we're looking at price action on any asset. And we're seeing this kind of pull back right now. So this is something just to watch. And we can see same thing. Look at this, same thing on Dow Jones. We had this sort of this symmetrical triangle breakdown, and now retesting that line and coming further down. So let's jump into the charts. Let's look at a bunch of crypto. Let's see what's going on. Let's see what's going on here. Okay. So we've already looked at the USDT dominance. We can see here with the Bitcoin dominance, this is looking rather uncertain. We got a little bit of a trend line. If we come right here, Option T or Alt T, if you're on a PC. I like to use quick keys. So again, just to remind everybody, if this is your first time watching, if you do Option J, that gives you a horizontal ray. If you're on PC, it's Alt J. Option H gives you a horizontal line, which is Alt H if you're on a PC. Option V gives you a vertical line. Option F gives you a fib line, Fibonacci retracement. That's how we do these quick keys. So we have this sort of trend line here. This is breaking down. There's not really much to be gained from looking at this chart. Now we're going to jump right into first quick look at Bitcoin, and then we're going to go through a bunch of altcoins. And I think, let me see if, okay. Let me know, Alex and everybody else in our, the stream Discord, let me know a bunch of the coins people were calling out. We'll go through those. So look at this. So Bitcoin, if we zoom in here, we're going to go on, let's go on the 12-hour chart so it's more clear. We're going to go auto. Okay. So we can see here, we've got this broadening wedge, boom, 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 expanding as we see, breaking down from here. So we have the opportunity to, I mean, this is a move all the way. This is a 16% move if we make it back to the top of this wedge. Now, one of the things I want to point out here is that this is not only a broadening wedge, but you can always have patterns within patterns, okay? We have this broadening wedge, but we also have this descending wedge right here. This descending wedge is a bullish structure in that these about 70%, 65 to 70% of the time tend to break out to the upside out of these moves, okay? Now, the caveat with that, with Bitcoin and crypto and especially when markets are sorry, I got a little alert there. Especially when markets are uncertain right now, traditional markets are uncertain. Everything going on in the market is just, there's not a lot of clarity with trend. Although this is a bullish trend, there is a possibility that this breaks out to the downside and then breaks out up to the upside. So very similarly, it could break out to the upside, retest, come down, and then go up. So we want to trade conservatively right now. We want to let a trend develop that doesn't have so much uncertainty in it. So where we're seeing right now, if we zoom in on this, let me go back to my crosshair. We can see right here. By the way, I just learned this today. Did you know that if you zoom in and zoom out on your chart, I don't know what the key is for PC, my apologies, but if you're on a Mac, if you hold the command button while you zoom, it keeps the chart right where you're at and still zooms in on auto. So it makes it a lot easier to navigate this. So I just wanted to share that little fun fact with you. But what I want you to see here is look at where this broke down on when Fed Chair Powell was speaking, you know, sort of the FUD coming into the market. This broke down basically roughly about where this support line is. I don't know if you can see. Yeah, you can see it on this chart. This broke down right to this level, $21,900. So this is, you know, quite interesting that this immediately was bought back up. If we look at it on the 5-minute chart, we're going to go to auto. We look at this on the 5-minute chart. This was, I mean, very down and immediately bought back up. This is, I mean, this is a very quick V-shaped recovery, boom, boom, as we can see there. So thinking about what's going to happen on this, thinking about how do we plan what the next move is? Well, we can see right here, and this is something I want you all to take to take into consideration. You can use this measuring stick right here, or you can come up to this right here where you can do long, short position, date range, and you can see this pattern that we're within. You can sort of measure from here. This is basically about 1 day, 5 hours. If this were to go sideways, it would take about 1 day, 5 hours before we hit this level of resistance. Now, of course, that doesn't necessarily need to go straight sideways, because what we also have right here, are any of you, I had a sneeze. Excusez-moi, Gesundheit. So as we can see right here, one of the things that we can look for is inverted Bart pattern. That is, this is kind of a jokingly playful but pattern that works. Is this sort of look right here? Basically, when you have a lot of liquidations that push down, we have sideways action, and then price action moves back up about as quick as it broke down. So we want to pay attention of the possibility, because this happens somewhat regularly, especially in indeterminate parts of the market like we're in right now, where there's a lot of uncertainty. So we have this push down. I mean, this is perfect sideways, perfect Bart haircut, you know, where we have the, so if this were to come all the way over to here, the breakout could be very violent back to the upside. So I don't want you to trade specifically calling that this absolutely will happen, but this is a possibility. And that's what trading and investing is. It's stacking the possibilities, the probabilities in your favor. So as it stands right now, I'm going to delete that. Now we're going to look at this on the 8 hour. We're going to pull up our indicators. We're going to pull up the traditional indicators first. Okay, we can see on the eight. Let's actually go to the daily. Okay, we could see on the daily that each time the stochastics have come all the way down here, once they start making a move, this is also relative to when the support line was formed. We get a large move to the upside until we get overheated on, this is on the stochastics. Now we're back here down in the lower range here on the stochastics. The RSI is still holding in the 45-ish range. So we do have a case to be made that this will move to the upside. Now, if we look at the MACD, is starting to roll over. So let's get more clarity. We're looking at the daily. Let's go down to the 4-hour. Let's see where we're at. Okay, so there's a lot of choppiness, as we can see right here on the 4-hour on the stochastic. So let's go ahead and look at the BitLab trading stack. And for anybody that uses a BitLab trading stack, I want to point out something because some people get confused. I have 1, 2, 3, 4 different settings right up here at the top, different templates that basically they're all the BitLab trading stack. But what I do with my trading stack is I come in here, double click on it, and I have my settings at 7,490. And I'm going to go ahead and put this on show. There we go. And I'm going to put it on full because this gives more of an active, you'll see here in a second when it loads up. Oh, there we go. So we could see this is a bit more active. If I come to 4, this is going to be a little more conservative because I have the default setting as more conservative so people don't trade every single bullish or bearish divergence, because that's not how this is meant to be used. This is meant to be used by stacking things in your favor, by stacking a group of the indicators showing likely momentum trend floor, likely bullish pressure coming to the upside. For instance, right here, trend floor, bullish pressure to the upside. Now we got just a little bit of a move, but we also didn't have a bullish divergence there. Now where we're at right now, we can see that we have let's go ahead to full for you all so we can see it all, baby. Where it stands right now is this is sort of a choppy behavior because we're in this sort of sideways, this could be a leg sideways like this and then down, but this also could be that Bart Simpson up. So what we want to do is we want to pay attention. We want to pay attention to, if we're here on the 4-hour, we want to pay attention to, okay, on the daily, we're seeing that there's bullishness brewing even in this downtrend. This is sort of overextended to this. So we're getting the support. So now when we're coming down to that 4-hour, are we seeing a choppiness, which we are? See how the extremists to the downside, to the upside, to the downside. This is trend cycle top. Look at this, trend cycle bottom. This is very unclear here. So what I'm looking for is to getting some sort of signal when we could, for instance, when this came down here, this would have been a buy signal for me because it came down to a level of known support, which is this major support line. We have the blue flag right here showing that a likely trend bottom. We have the extremist sticking to the downside right here. We also have the 2 bullish divergences on the market intelligence. So now if we come down to the 1-hour, we can see what's going on here. Look at blue forming. We can sort of, okay, go back to my crosshairs. So we can see bullish divergence is forming, but we're seeing a lot of choppiness. So I'm waiting for clarity from me. I'm waiting for clarity out of this move to give me a good indication of what's going on. Now, okay, we can go to, let's go to the 4-hour. We're going to mute market intelligence. We're going to look at our levels, zoom out. Zoom, let's go to the 8 hours just so we can see more of what's going on in the chart. Okay, so we've got this is on the 8-hour, the 200 moving average is right about 21.7. But what I'm looking at is this level right here, this 20,780, this sort of low right here seems like it's going to be a likely pivot point. But really, if we break below this level right here, 21,400, I'm not looking at this as a strong possibility to hold a strong move here. If we break this level, this 21,400 that I'm still targeting, this is a box that I've had here for a while now. This is that level right around the golden pocket. Sorry, not the golden pocket, the CME gap as well, I believe, as a golden pocket. And we know that because we can do option F from this bottom zone all the way up here to the top zone. Let's go over to the top zone and look at where this golden pocket is. It's basically 19,400 to 19,700. So this zone right here, we're going to make this a bit brighter. This zone right here, we can make it just a little bit larger. This is a zone that I'm watching where I have orders placed to accumulate in this zone, 19.2 to 20,000. If we lose this level, then I'm going to be looking like a hawk at what's going on. So that's what I'm seeing on Bitcoin right now. This is if we move to the downside. Mind you, we are holding this zone. We are holding this zone still. We did try to break down out of it. Piano Matty B used to say, where it wicks, it will candlestick. So we do need to be paying attention that this is just a fake out move and it will continue to the upside. We really want to pay attention to our momentum indicators right here because we do see, look at this, bearish divergence on the hidden volume. So this is on the 8-hour. If we come down to the 2-hour, yeah, it's still unclear. So I'm looking to see where this move goes. If this move comes into this apex and goes back to the upside, then I'm looking for a move, likely finally, testing this 25,150 again. Now, we got a bunch of other charts to do. Let's see if they sent me a list. Okay, Algo, Zil, Vet. All right, let's do it. Let's get into, I think I already have an Algo chart. Boom, right here. All right. These may or may not be some of the coins that I pay attention to regularly. So let's go ahead. Let's go to the 3-day. Let's go auto. Okay. Man, look at this, just choppiness. So we're going to do option T, get our trend line going here. Some trend lines don't look like they matter. And then you get some clarity on what's going on, and then they do matter. So let's see. So we got this line there. So that's going to be an important line. Now we're going to do option T. Now, let's go ahead. Algorand. I love Algorand in terms of prospects for the next bull market. This is on the 3-day. So let's go down to the daily. Let's see what's going on here. Okay, so what we want to do here to see exactly what's going on. I'm going to mute the VPVR. This is the volume range of the visual profile. So it gives you volume at price, what's been trading at each price. So we're going to do a Fibonacci from here, option F from the bottom to the top. And look at this. I want to emphasize how important and how wonderful Fibonacci's can be. Now, in order for me, when I use Fibonacci's, I like to have this fib levels based on log scale. I turn this off. I find that it is more accurate for where price action moves. Now the golden pocket is at 0.618 to 0.65. We've pulled back to here. We had this double top, which what is this double top? This is what, we're getting basically topping formation, likely push to the downside. And that's exactly what we're seeing here. So we push up, pull back, push up, pull back. We get this sort of round over top. Now what I'm expecting here is for this, it's also going to be large in part, barring any sort of large partnerships, going to be, okay. Sorry, some issue there. Large in part following what's going on with Bitcoin, unless it has some sort of large partnership news or anything like that. So this has come down. It's touched this level right here, which is also, look at where this sort of dropped right here. Option J gives me a horizontal ray. Now we can see if we lose this level, then if we lose this level, then I'm looking for us to retest. Let's go back to the 3-day, see if there's any key levels here. Yeah. So I'm looking option J. So if we lose this level, this golden pocket, basically this 21 cent level, if we lose this, then I do think that we are going to explore further downside, likely here into the 18-cent range and potentially even retesting down to 15 cents. If this happens, I'm going to be stacking up like mad. But what you can see here, and I want to point this out, you can see that this is on the 3-day. This is looking like it's overextended. Why? Because these are pointing to the downside, out of the norm. This is saying when these are sticking out down, this is saying that the move is too fast down. It's out of norms. It needs to come back within the cloud. You can see this cloud when these are sticking out of the cloud and when it's in the cloud. This is basically showing a bit of bullish pressure or an overextension of bearish pressure. Now, what we can also see is that we do have a neutral sort of flag right here, but this is on the 3-day. So let's go ahead and look at the 12-hour. Okay, look at this blue, 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 blue. This is overextended coming to the downside on the 12-hour, but we do have a bearish divergence on the hidden volume. Let's go ahead and look down at the 4-hour, still getting blue. So I am looking that it's looking like it's likely to have a, let's go to the 1-hour. Yeah, so this is looking like it's likely to have a bit of a bounce. Now, how much of a bounce are we going to get? So let's go ahead and turn off market intelligence, and we can sort of extend this trend line here and get an idea of what's happening in this region. So now we're going to do a fib from option F to the top there to the bottom of where we're at now. So I'm looking at a retest. If we break this level here at about 22,240, let's go ahead, zoom, auto. If we're able to push back up and break past this level right here, 22.5 cents, that it's likely that we can get a push back to this 26 cent range. This, of course, will be contested based on what the context of the market is and what's happening there. This is how we look at our downside targets and our upside targets. We map out the potential to the downside, and then we see, okay, on this sort of this pullback, we have this descending trend line. What happens if it pushes up to the upside? We very well could come all the way back up to 29 cents, but we have to know that we're always going to contend first with the golden pocket on the retrace back to the upside, which is at this level. Okay. Golden pocket, but he prefers the light red magenta pocket. Well, you know what, Chad, you can color these in whatever color you want. And for instance, just so y'all know, you see how mine are transparent? A lot of people have theirs all colorful like this. I think it just makes the chart unimaginably uneasy to look at. I come here, you can just turn that down. You can turn the background off right there. Now that's Algorand. I'm looking on the more local time frame, looking like it's going to have some contested move right here for the next 2 or 3 day, a day or two to the sideways or retesting this. And then potentially a push up to the 26 cent level. However, I am still watching these downside targets. Next one being the 20 cent level, of course, and then the next one below that being 19 cents. So there's still potential to the downside on Algorand. So watch what's happening with Bitcoin. Now we're going to do Zilliqa. I don't think we've done Zilliqa on this channel yet. So let's do Zilliqa. Let's do Zil USDT. All right. So we're not going to do the macro, midterm, micro, because we already understand what the macro's been. We're doing this very quick. We're doing fast charting. So we're going to mark this option J. That gives us a horizontal line. Look at this. Look at this. Look at this head and shoulders right here. Boom, boom, boom. Now, if we want to see how this broke down to it, let's just get a good example. Look at that. This is why you need to understand patterns. So why do I know this is a head and shoulders? Because we got a shoulder, head, shoulder. Okay. So now, and you measure that, basically you measure that from the top of the head to the neckline. The neckline is this line of support. this line of support that we have, you can do it from multiple places, but basically right there. So now with the Zilliqa, what we want to look at here, we're going to double click on the chart, minimize our other indicators. We can see a trend line immediately right here. So we could see, it's a bit of a channel. We could do it from bodies or the wicks. I'm going to do it from the bodies. Yeah, I'm going to do it from the bodies on this one. Now, what we want to do here, we could see if there's any. So this was a previous price action low. Look at right where it bounced. So what we can do here is we're going to do it from this move here, option F, top to bottom. That gives us a zone to the upside, which is this target right here, 29 cents or 2.9 cents. Now to the downside, I do think if we look at the actual, full spectrum of indicators, we also have got to look at this, though, because this is a pretty big move, and we want to make sure that we're not going to come all the way. Okay, now this isn't too bad. So from this move, this bottom, all the way to the top, you can see that we are sitting right at the 0.5 on this fib. We are to lose this level, which is 2.5 cents. I do think that this, and there's a lot of interaction here too. You see that we got previous price action tops, option J, previous price action tops, price interaction right here. And this is right in the middle of the golden pocket, which is essentially at 2.3 cents, which is roughly, if we press the shift bar or shift button and click on the chart, come on. Press the shift button, click on the chart. That gives you a measurement tool. That's another 11% drop to the downside. This would be a good zone to find an entry if you're still leaning bullish. Now, if we just break out north from here, if we break out up from here, which we very well could, it's all going to be, a lot of this is going to be contingent on what's happening with Bitcoin. If we break out positive from here, then I think that we're definitely going, there's obviously some price interaction there. This is right in line with where this golden pocket is. If we break out above here, I think we're going to get a little bit of a struggle, at the 2.8 cents, but then up to right about 3 cents, not 3 cents, sorry, right about 2.9 cents right here. So that's what I'm seeing on Zilliqa. And that's how we're doing it. We're mapping our Fibonacci's on, basically your retracement up, but also your pullback down, and then looking at your trend lines. And then we can look at our indicators. We got one more coin to do before we're going to wrap this out. But let's go down to the 4 hour. Okay, look at this. We're getting a blue, which is a floor. By the way, if any of you are interested in these indicators, you can come over to bitlabacademy.com, come over to indicators right here. We still haven't really severely discounted. And you can just purchase the full stack right here. And if you use the code relaunch15, you get an additional 15% off your first month. Again, that's relaunch15. And you just put that in. When you go to purchase, which is, I'll just going to show you because a lot of people get confused on this. Come down here where it says have a coupon, and you type in relaunch 15, boom, apply, and you get that additional 15% off. So we're getting a blue signal right here. This is showing a trend floor. All these indicators are part of the BitLab trading stack. Blue floor, but we're not getting any sort of bullish divergence. Oh, I don't have the market intelligence on. So we're not getting a bullish divergence yet on that. So let's go ahead. Let's go to the daily. Okay, we are getting a bullish RSI divergence. This was showing overheated. Now, if we come over to the 1 hour, if there's any sort of signal there, look at that RSI divergence, momentum, bullish divergence. We have a trend floor. So this is starting to shape up like it's looking to press out, but I wouldn't take this trade until we broke above this line right here, this resistance line. Now, the last one we're going to do, and this one's going to be turbo fancy. We're going to do Vechain. So now we're going to do man, another one of those head and shoulders. So, okay, we got another, this is, all these coins are looking very similar. We got trend line. This is looking a little bit more like it's broadening though. So now let's come down to the 4 hour. All right, so what we're going to do very quickly is, okay, so we're going to do option F from the top all the way to this bottom. So this is the point of interest right here, option J. And this is also, look at this, is also perfectly in line with a lot of price interactivity there. So now on this move, option F from there to here, I'm looking at, this is looking a little, it's very choppy. So with that, I'm still looking at between these two channels. If this breaks down out of this, then we're looking at levels that are quite a bit below this. Option J. Let's go ahead and. So yeah, if we lose this level, then I'm looking down for 2.2 cents. I'm looking for 2.2 cents if this breaks down out of this. And if we go below that, then it's going to be a much larger move to the downside, probably in this region right here, 2.15 cents, which is, this is a, it's a 8% move. We are on the 1 hour. Let me go on the 12 hour. So, yeah, so option F, go to the top. Now, okay, yeah, so this is the area that I'm looking at right here. I'm looking at 0.216, 0.215. And if we lose this level, then we're coming down to the 1.8 sort of level. That's what I'm seeing on Vechain. If we do push up to the upside, then I'm looking at that level right about 2.6 cents. That's what we're seeing. We 2.6 cents. If we're able to overtake that, then we're coming back up to that level around 2.9 cents. So that's what I'm seeing on all the different charts. That's how we're doing it. That's how we're mapping out a variety of different possibilities of what's happening. The market is trying to shake everybody out. We're getting that FUD candle. We're getting the markets just chopping about. Before we go, I do want to point out that it looks like the USDT dominance is pushing up right now. If we look at it, the 4 hour is pushing up. Let's go ahead. This isn't going to hold a lot of weight, but it is starting to look like it's overheated on the USDT dominance. So we are getting bearish divergences. So hopefully this will roll over. The Dow Jones is sort of pulling back. The Dixie is rocketing right now. So there is caution in the sphere right now. Be cautious, be wonderful, trade smart, use that checklist, go over that trade, go over the video that I did yesterday. Make sure you're checking that out. And that is, where is it at? That is, if you're curious about, how to use a certain, if you're curious about how to, there's the words. If you're curious about how to use those indicators, look for all the setups, come over to the BitLab Academy website or YouTube page and check out this video right here, best indicator for traders. I really break down looking at all the different setups and how you can use them as leading indicators, as well as the final confirmation indicators. And with that, that's all I got for now. Make sure you hit that like button, hit that subscribe button, ding that bell if you have not yet, and make sure you go over to BitLab Academy, check out that website, sign up for the newsletter. That's all I got for you today. I hope you all have a wonderful day, and I will see you in the next video. Adios, muchachos. Thank you for coming. Thank you for being here again. Adios, muchachos. Thank you for coming. Gonna do this again and again. Gonna make that money.